Oh, hey. I didn't see you there. What was that? Nothing. It's not my secret weapon. No, just, editor, make sure we cut this out. I don't want these people to wonder what I was, Got to keep this secret to myself. Definitely don't look at the link in the pinned comment for Athletic Greens AG1. It's definitely not one of my secret weapons, and I'm definitely not going to spend all the affiliate income buying the dip. We are going to cut this out, right? Yeah, okay, good. Yeah, cool. Okay, Tesla stock has gone full Riley Reid today. I'm not going to explain that one. Collapsing. More than 12%. Year to date, Tesla stock down now, over 12%. And we're one trading day into 2023. This is going to be a very interesting year. And I think this short clip sums up the major disconnect now between perception and reality.
That's growth of just 40% compared to deliveries in 2021.
That's right. Growth of just 40% year over year. Tesla can't win. So in this video, we're going to watch a few talking heads in the mainstream finance media and some stock analysts sharing their thoughts on Tesla's disappointing 2022 full-year production and delivery numbers. Before we do, I just want to ask a question. Do you think anyone's going to mention the whole vehicles in transit thing, or are they just going to ignore that part? The thing that was on the announcement of the, hey, more vehicles in transit, blah, blah, blah. I think they're going to ignore it. The reason I mention this is because if we focus on the thing that matters, production, because as we know, Tesla doesn't have a factory in the driveway of the consumers actually buying their vehicles. So after they produce a vehicle, unlike most automotive manufacturers who just sell them to a dealership and then count that as a sale instantly, Tesla doesn't count a vehicle as delivered until it's actually been delivered to the customer. Yeah, I know, you know where this is going, right? That means there is a gap, a delay in time between when a vehicle is produced and when a customer receives it. Tesla explicitly called this out in their Q4 delivery announcement. If anyone's wondering, Tesla increased their production year over year by 47%. I don't think you're going to hear that number a whole lot in these comments though. It doesn't paint the bearish narrative. I also have a funny feeling we're probably not going to hear anything about the forced factory shutdown in Shanghai that cost Tesla close to 100,000 vehicles of production for the full year. Now, I know this is a very controversial statement to make, but if you shut down a factory that's producing vehicles, it doesn't produce vehicles while it's shut down. That means that you produce less vehicles than you otherwise would have were your factory not forcibly shut down. Also important context. Hey, what is this? Best video in years? As usual, great material, SMR. This video alone is worth years of Patreon membership. This was so valuable it will make future subscription costs feel free. What's with these weird fake comments from people who definitely aren't Patreon members? Who did this? Can we get a real comment, please? No one's going to believe these. Ah, there we go. That's better. I love when you call us bitches. I don't support anyone else on Patreon because they don't call me a bitch, which is what I am. Thanks. Happy New Year, my brother. I love you. So I'm pretty sure the message here is definitely don't join Patreon, bitches.
On Tesla, of course, as we do look ahead for what this year has in store for the company, let's bring in George Gianarikas. He's managing director at Canaccord Genuity. Got a buy rating, $275 price target on the stock. Nice to have you. You wrote in a very recent note that you thought, at least in your opinion, that these numbers that we got on production and delivery were better than at least the worst case fears. Market doesn't seem to be taking it that way, George, does it?
No, I think everyone's now waiting for the conference call. Elon Musk gave a chat on Twitter Spaces a couple of weeks ago and basically alluded to the fact that the company is going to value unit over margins as we head into the cyclical downturn in autos. And so I think we're all waiting to see how bad the margins and the average selling prices could get next year. Well, we have confidence over the long term is that every time, and why we think the company prefers unit over margins, if you think about it, every time they sell a car, there's a $15,000 opportunity to add software to that vehicle. That's 30% gross margin in addition. And that $15,000 is autopilot. Right now, we assume they're at about a mid-teens penetration rate. But as that product gets better, as people feel more comfortable with it, we think there's a long-term opportunity to really enhance gross margins.
This is actually a very, very, very important point. Elon did confirm Tesla, in essence, they'll drive their margins as low as necessary to continue selling every vehicle they make. This was always going to happen though. I mean, hello, duh. And of course, George points out the reason why. Software revenue, almost pure profit after the purchase and sale of a vehicle. This is one of the things that makes Tesla distinct from just about every other automotive company on the planet. Consumers can buy a vehicle, even if Tesla sold them with no profit margin whatsoever, literally 0% margin. And then after the fact, the consumer can drop $15,000 US buying a software package. Tesla presses a button, bang, instantly. Now they made 15 grand on that sale instead of zero. In addition, every vehicle Tesla deploys on roads is a data collection sensor suite, training their full self-driving software to eventually solve autonomy. Next minute, robotaxis awaken. It is in Tesla's best interest to massively expand their total install base, their monthly active users. Nice to hear an analyst whose brain is working when it comes to Tesla. Also worth mentioning that his current price target is about a 1.5x above where we currently are. Yet more than a doubling and then half another doubling. And I still think his price target is absurdly low, not gonna lie.
So that's one of the key reasons why you still have a $275 price target on the stock?
Yeah, well, that reason, and if you look at this company relative to others, I'm sort of a meat and potatoes kind of guy. This is about earnings and earnings growth. Even if you assume it's 20 or 30% earnings growth, we assume it's a little bit higher than that. We get to about $11 in non-GAAP earnings by 2025. And if you compare this to the other big cap tech companies, which we think Tesla should be comped to, it's incredibly attractive. I mean, this is trading at close to 10, 11 times earnings on 2025. That group, which includes Apple and Amazon and Nvidia and Meta, they trade about 17 times. So you're getting much better growth for a much better valuation. And we think it screams relative to those companies.
How dare this guy use so much logic and reason in a single sentence? Much better growth, much cheaper valuation. It screams. I mean, I don't know what he's talking about.
Wait, those companies trade on 17 times 2025 or today?
Yeah, it's 2020. If you look at them as a group right now, if you look at Nvidia, Apple, Microsoft, they trade about 17 times 2025, yeah. Correct?
Okay, yeah. Now, I guess the question is, you're saying this is a cyclical, not secular issue in terms of this small shortfall on their growth estimates for this year. Doesn't that have to get into the valuation as well? The fact that this is basically subject to some of the same cyclical forces. Some are going to argue that the model lineup has not really been refreshed very recently, and exactly how is it going to compete, in a global auto market where everybody is trying to, do a lot in EVs.
A couple of things to address here first. Rather than updating their vehicles once a year, new model year, Tesla doesn't have a 2023 Model Y, they just have the latest Model Y. Instead, Tesla constantly improves their vehicles. Every engineer at Tesla has a job: delete parts and processes, plus make things better. Every time Tesla can add a new feature, new functionality, etc., they do it. They don't wait until the next year. So this idea that Tesla's vehicles aren't being updated regularly is asinine. This is the old world thinking, oh, wait, it doesn't have a new year after the name, therefore it must not be new. In fairness, Tesla is basically the only exception to this rule. The rest of the automotive industry literally does sit around, wait an entire fucking year to add any new features or functions to their vehicles. Usually, the most year-over-year innovation we'll find in a new, updated, cutting-edge release of the same vehicle from a legacy automotive manufacturers now is 7 cup holders instead of 6. Just imagine if this same reasoning was applied to Apple. It's like, hey Apple, how come you haven't released something to replace the iPhone yet, you fucking dumbasses? It's getting a bit stale, isn't it? Can't you release something new? The original iPhone was like, it was 2008. The example with Tesla is even more ridiculous though, because unlike Apple, who update their iPhone maybe once a year, Tesla's constantly updating their vehicles. Yet still, Apple still has the iPhone a decade and a half later, and I think it's doing just fine. Just because they didn't change the name of the product or release an entirely new product, I mean, come on, man.
Yeah, and I think I think people are trying to figure out how cyclical this is, what the secular growth is going to look like even into a downturn. And look, the stocks came off like 70% last year. It's down another 10% or 9% today. So clearly a lot of this, in our opinion, is priced in. And with regards to new models, they announced 2 things. One thing actually that was interesting, they announced an analyst day, and they're also going to introduce their Gen 3 platform, which is this low-cost model that people are talking about. Maybe it ramps in 24 into 25. And don't forget, in the second half of this year, they're bringing on the Cybertruck, which is a game changer. And look, some of the orders that they have may or not stay, but people had assumed there's 1.5 million orders for the Cybertruck last time we saw some published numbers.
All right, time to go inside Tesla's year-end production and delivery numbers. This morning, Tesla's stock is down nearly 5%, or 4.1% at this point. And JP Morgan cut its price target to $125 from $150. Also, Truist Securities cutting its price target to $299 from $348. Even the $299 is well above where the stock trades right now at $118. Let's get over to Phil LeBeau. He has the details on this. Phil, good morning.
Good morning, Becky. And the commentary from analysts is mixed this morning, largely because they say, look at these numbers. Even if you are a bull, you cannot be optimistic about the numbers that Tesla reported for the fourth quarter and for all of 2022. For the fourth quarter, the deliveries came in below consensus, which was for 417,000 vehicles to be delivered. They were delivering 405,000. Total for the year, 1.31 million. That's also below what the expectation was. Here's why that's significant. That 1.31 million, that's growth of just 40% compared to deliveries in 2021. Remember, the company's general guidance, which they gave, I want to say about a year and a half ago, was that they would have average 50% annual delivery sales growth. Well, this is clearly not 50%. Now, Tesla bulls will say, well, look, they said they would average that over many years, so you're going to have some years where it's not 50%.
Exactly. Tesla's never said we're going to have 50% growth this year. It's over a multi-year horizon, and the reason is quite simple. It's impossible to predict weekly, monthly progress on an exponential ramp, but Tesla's talking about the overall trend. Second, as I said in the intro to this video, Tesla increased their production from 22 to 23 by 47%, and that was in a year where they had a factory shut down by the insane Chinese Communist Party, costing them about 100,000 units of production, global supply chain challenges, much slower than expected 4680 cell ramps, and German bureaucracy and red tape delaying the ramp of their Berlin factory by about 8 months. Context matters. So do facts, and here's a chart made of nothing but the facts. If you're curious, why not whip out your calculator and work out Tesla's long-term, multi-year compound annual growth rate in terms of deliveries? If you can't be bothered, just look at the chart and tell me, does that look like an exponential curve to you?
But 40%, that's well below expectations. The problem goes back to China. We talked about this in December, and really at the end of November, you started to see the sales pace slow in China for a couple of reasons, COVID restrictions being a primary one there. But you also have greater competition, and it's forced the company to cut its prices, whether it's in China or at the end of December here in the United States. That's going to be weighing on margins. So as you take a look at shares of Tesla, remember that the fourth quarter results will be reported just about 3 weeks from now, January 25th. Two things are going to be in focus between now and then. First of all, does Elon Musk say anything about the annual delivery guidance? Do they bring it down? Do they say, look, in the future, it'll just be 35 to 40% annual delivery growth?
Tell us you don't understand Tesla, exponential growth, or the inevitable EV adoption that's currently happening without actually saying it. Ladies and gentlemen, Tesla will not be updating their multi-year guidance for 50% compound annual growth rate for production and deliveries. Not going to happen. They're still aiming for that.
Or do they also talk about the impact of margins and the compression that they're going to be facing? I don't expect any commentary pre-earnings about margins, but they may say something about delivery guidance, though it's more likely we'll probably get that when Elon Musk does the earnings call on January 25th. If he does the earnings call. I suspect he probably will. So we'll be covering this all day long, guys. Not surprising to see the stock under pressure, given the fact that these numbers came in short of expectations.
You know, the margin question is really interesting, especially with the discounts they were offering to have people deliver, accept delivery by the end of December. And then I think there are additional ones in China to receive by maybe the end of February.
Right. So the question becomes, do they start doing more of this in the future, Becky? And you know what that looks like if Tesla starts doing this on a regular basis? Traditional automakers. And for a long time, that was the thesis for Tesla bulls. They are not a traditional automaker. They won't have to get into the incentive game like everybody else in the industry has for decades. Well, now your question becomes, you did that at the end of this year, and yeah, occasionally you see that in the past from that, but very, very rarely. Now has this become a regular part of Tesla's business? And if that's the case, why are you giving them the multiple up here when traditional automakers have a multiple down here? Yes, they have higher gross automotive margins. That's not going to erode immediately, but that's going to weigh on those margins, and that's part of the question that analysts are trying to figure out right now. What kind of multiple do you give this company if you see demand slow down and you see margins come under pressure?
And if they can't get the government subsidies they used to get as well.
Sure.
So thank you. We'll be watching through the day.
Steve, it's good to have you. Let me just quickly start with what Laura just reported. It is pretty astonishing that SpaceX hasn't suffered the same fate as Tesla itself, as Twitter. What does it tell you about the Elon Musk effect?
Well, look, a lot of people are saying they barely missed numbers for this quarter. The fact remains they sold 405,000 units. That's an enormous number, heading to 1.31 million. That is 40% growth. No other auto company in the world is growing that quickly. Additionally, they're the most profitable auto company out there with 16% gross margins. That compares to about 5 or 6% for Volkswagen, General Motors, or Ford.
Steve Wesley coming in hard with some more facts, very important facts, especially as we head into a global recession. Tesla has a lot of pricing power that other automotive manufacturers simply don't have. Tesla can massively cut the price of their vehicles and still make higher profit margins than any other automotive manufacturer on the earth. In fact, they could cut their prices by more than other automotive manufacturers' entire margin.
They're doing pretty darn well, but make no mistake, share price off 65% for the year. That's not good, but I think a lot of that is due to two things. One, all of the havoc with Twitter, and also the fact that Elon himself sold $23 billion of shares this year alone. That put downward pressure on. But if you look forward to next year, put some of the intrigue behind us, I think Tesla's looking at an awfully strong 2023.
So let me ask you, Steve, I don't know whether you continue to speak with Elon Musk privately, but if you were to talk to him privately right now about Tesla and what he needs to do to right the stock, what would you tell him?
Well, first, I don't speak with Elon, so I have no inside information here. But here's what I'd say, and I've known Elon for 25 years. You're a brilliant innovator. You have literally helped create the electric vehicle industry. Virtually every company in the world is going all electric. Stay focused. You're the king of the hill now. Don't let anybody take that away from you. Here are the three things investors need to look at. One, Tesla needs to continue to grow internationally. Already, they're doing a great job of that. They've surpassed the Volkswagen Golf as the number one selling vehicle in Europe, gas or electric. International growth has been stunning. Keep the profitability lead. Tesla's doing two things none of the other automakers have been able to do. One is drive the cost of batteries faster than anybody else. They were the first to take battery production in-house. It's given them a real cost advantage. Second, nobody is driving more revenues from what's called over-the-air software. That's 95% gross margins. That's great news. They also need to win the trucking wars. They're bringing the Tesla Semi to market now. Tesla Cybertruck comes out in July, sometime in early Q3. If they do well there at all, that's going to be a spectacular year for 2023. Real advice is stay focused, continue to bring in top management. The move that was announced this week, bringing Tom Zhu in, the best operating executives from the country, the person who really made Tesla China hum into the U.S. He may be the heir apparent to be the new CEO at Tesla.
It is a new low today, a new 52-week low. Speaking of stocks that have been in a downtrend, hitting new 52-week lows seemingly every day, if not every other. There it is, down near 14% today, getting back towards $100 a share. So I want to discuss this in this way. Joe has it in the Joe T, as most of you, I think, at this point know, because we discussed it on multiple occasions last week. And therefore, you're limited to what you can really say right now until you go for the rebalance at the end of this month, when you'll be more public with the kinds of moves that you made. So taking all that into context, I'm curious, Josh, of your thought on what's been going on here, if you view it much of the same way you do Apple. I haven't gotten your perspective or point of view on Tesla since this whole thing really accelerated within the last, say, 2 weeks.
So full disclosure, I never made any money in Tesla on the way up. I never owned it. So I was wrong on the stock for 10 years. But the thing that kept me away was my inability to make the leap from it's a car company to it's a technology company. And had I been able to make that leap, I would have made a lot of money in this stock, and a lot of people did. And I just was not one of those people. But that's what kept me out. His personal antics or what, I think he's hilarious. So that's not the reason why I don't like Tesla or whatever. I just couldn't make the leap, because then I look at Ford, I look at GM, you back out the cash. These stocks were trading at 5 times earnings.
How to miss out on a more than 8,000% return in just over a decade? Think Tesla is just a car company. Compare their valuations to Ford, Government Motors, etc. Companies that will literally be bankrupt before the end of the decade, and miss the opportunity.
So, and then look at the Japanese automakers. So I just was never there. Now it looks like the puck is headed toward where I've already been, which is that, oh my God, it turns out they are susceptible to cyclical demand trends within the auto industry. It just took a while for them to get big enough where that would actually matter. That's number one. Number two, I know the bears have been wrong talking about competition on Tesla all these years. I understand that. But now they're right, because when you look at the EV offerings from every major auto manufacturer and some of the upstarts, there's a lot of product coming to market. And it just makes it harder for Tesla to stand out, even if you believe, which I do, that they have a lead technologically.
Let me ask a question to the guys in the room. If you walk into a party and you see a legit 10 out of 10, suddenly as the night goes on, a bunch of 6s turn up and some 5s, maybe a 7, 7.5 here and there. So, by the way, yeah, sorry ladies, this is actually how our brains work. Does the presence of a bunch of 6s suddenly mean the 10's no longer the hottest woman in the room? No, it doesn't. So the presence of more 6s and 7s in the room doesn't mean Tesla's no longer a 10. Just saying.
Third thing is what's going on with his brand. That argument doesn't really move me, that all of a sudden every liberal who wanted an electric car is going to hate him because he RT's DJT. That doesn't move me, but I do think that sentiment weighs on the stock right now. I don't know for how much longer.
Well, I mean, the stock is down significantly since the Twitter deal.
Let me ask you a question. What does Tesla stock do the day he announces a new CEO? What do you think it does? I think it goes up like 15%.
It probably goes up. The question,
you want to be short of that day?
Well, the question is, does it stay there? Because last week it had a nice rebound,
stays anywhere.
Steph, I had one money manager tell me last night that Tesla, quote, remains the biggest opportunity to extract further reduction in excess market cap in public markets, i.e., this stock needs to come down even further. The bubble needs to pop even more than it already has. It's heavily owned. It has a retail component to it. What do you make of that comment?
Well, it's possible, but the stock's already down 80% from its highs, so a lot of bad news is priced in. It's interesting that it now trades at 28 times earnings. That's getting more reasonable. I'm not touching it at 28 times earnings, but this thing used to trade at 100 times earnings. So 28 times is certainly
it's 21.
interesting.
It's 21 times. I mean, why is 21? Why is 21 more reasonable? You use your word, more reasonable now. If you say why should they even get that sort of premium now?
Well, I'm saying I wouldn't touch it. I don't know what numbers you're using, but I have 28 times estimates on forward. If it's 21 times, fine. They just put up 40% growth in deliveries for 2022. This company is not shrinking massively.
Don't tell that to the stock market.
My problem is you are seeing more competition, to Josh's point. You are seeing price cuts. You do have a book to bill that is under 1. It's at 0.65 times. So they're definitely feeling the pressures. And so at 21 times, it's not that compelling. But I'm going to tell you that down 80% from its highs, there's certainly more value here, given the growth that they're putting up. So I'm watching it. I've never owned it. I've missed it all the way up, missed it on the way down, but it's certainly something to contemplate as it continues to just spiral downward.
Isn't it interesting that the folks who've never touched Tesla stock are now starting to go, hang on a minute. I mean, geez, I'll tell you what, it's kind of looking like decent value now. I don't ever remember a time when even the bears were bullish on Tesla.
Was trading, 9 months ago on like 40, 50, 60 times earnings. And so when you get into that kind of valuation level, very high multiples, that means the street is anticipating what I like to call a very long duration high growth. So the business is going to grow for a very long time at a very high rate.
This fact, by the way, still remains a fact. It will happen. Tesla will continue to grow at a very high rate for a very long time, but this is something the stock market appears to have completely forgotten in the last few months. I mean, hey, I understand fear-induced brain damage does some crazy things.
And you can imagine today that when we see like the near-term outlook getting very cloudy, Phil describes that very well. It is the first time for everything. First time we get into a recession for an EV manufacturer. First time we see like a super high growth business like that getting into that kind of recession with products that on average sell for $55,000, which means that people don't buy that just out of their pocket. They need to borrow money for that. And you were just talking about how interest rates were increasing. So there are so many uncertainties for this year that like the kind of growth rate we should expect for Tesla for the next 10 years, nobody is looking at it right now because there is no visibility. Our price target is actually reflecting confidence into that, into this incredible characteristic of Tesla, which is that they are selling on a run rate basis today 1.8 million cars a year. And they are just at the very beginning of a cycle that is going to basically, over the next 30 years, replace almost 1 billion cars that are out there on the road buy electric cars.
Once again, Pierre Ferragu spitting some facts that the stock market appears to have completely and utterly forgotten.
And we believe they're going to grow very, very fast for a very long time because they benefit
what's fast,
from that
Pierre?
tailwind.
Is that 40%? Is it 50%? Is it more? What's fast to you?
Yeah, so fast to me is very simple. It's less, not as fast as Elon wants it to be. You know that how much Elon Musk, the CEO of Tesla,
of course,
is often too optimistic. So he's like managing Tesla to deliver 50% growth in units every year. I think Tesla will fall short of that. So I think good growth would be 40% in volumes. And of course, in order to get that growth, you need to reduce your prices over time. So
this guy gets it. Tesla is aiming for a 50% compound annual growth rate over a long time horizon. Obviously, this is a huge stretch goal, but that is what they're aiming for. And yes, they probably will fall short. The question is, how short? Is it 43%? Is it 38%? Is it 47%? Is it 3%? At this point in time, I think Wall Street thinks it's about 3%. Just saying. Earlier, Pierre made a very important point. There's approximately 1 billion internal combustion vehicles on roads today that need to be replaced by electric vehicles and will be replaced by electric vehicles in the coming decade and a half, maybe 2, maybe 3 decades. Who's going to be selling a large portion of those electric vehicles? Any guesses? Let me know in the comments below, because I definitely don't know the answer to that question myself. And before I get out of here, a couple of things. First of all, please don't steal my secret weapon, that green stuff that was meant to get edited out. It was just for me only. There's no link in the description. And also, don't join Patreon, because those were fake comments that we saw, except the one about me calling everyone bitches, because I do actually do that. So check out the links in the pinned comment. I'll see you over on Patreon. Love ya.